Doesn't that sort of bring you into the political equation then to some extent?
No, it keeps us out of it.
Well, surely if you're advising the government on a move as crucial as that, then isn't it incumbent on you to also brief the opposition party that could be the government within?
We can express our views to the Minister about that, but it is his call to do that. That's appropriate constitutional precedent, and of course that's what we will follow.
So did you maybe say to the Minister that perhaps it would have been a good idea to brief the National Party as well?
You can access, under the Official Information Act, the papers, the advisory papers, and get answers from that.
Can you answer that, though?
You need to go through a process of accessing those papers.
All government official information is official information. It's available.
Correct.
Later than it's available now.
Subject to the conditions in the Official Information Act, and that's why that process exists, to test those.
You say?
Sorry, just a minute.
Has there been a clear verification of how you're going to operate in the week after the election, assuming that there's a change of government? Are you going to immediately brief and take instructions from the government?
This is all laid out very clearly and hasn't changed. It's laid out under direction from the State Services Commission and the Cabinet Office. We have a normal government at the moment. After the election, there is a caretaker government. That's the convention. It hasn't changed. The process for briefing other parties, possibly incoming governments, after the election is very clearly laid out, and you can go to them for that detail.
Given that this is obviously a very unusual circumstance.
Yes, requests for briefing can be met if they're coordinated through a central agency channel, and sometimes they require the agreement of the caretaker Prime Minister.
So how long is the caretaker government until this government formation?
We're talking about the period from the election, from election day to formation of government.
Dr. Bollard,
Sorry, can I go back to Simon?
You said you weren't too worried at the moment about the extent of the fall of the New Zealand dollar. At what point does that become a concern?
Yeah, look, we don't have any particular trigger numbers in there. We wouldn't want to see the New Zealand dollar dropping hugely at a fast speed, but we also see no sign that's happening. The New Zealand dollar has actually been very well behaved over the last couple of months, and we've had an easier ride of it than perhaps the Australians, for example. But we know these are very unusual international circumstances, and so you can't really predict what might happen.
There was a time, I think, after the Asian financial crisis where markets suddenly became very concerned about low growth and high interest rate regime, and the New Zealand dollar dropped below 40 cents, I think. Do you think there's a concern that that sort of scenario could be replayed?
The New Zealand dollar has been held reasonably by commodity prices that actually haven't fallen out of bed. We'd expect in the medium term the New Zealand dollar to reflect basic fundamentals. Short term, it can be subject to international instability, but we're not actually expecting that at the minute. We're not actually seeing it at the minute.
And what about the current account deficit? Is that, I mean, you could have a switch to a focus of New Zealand's very high current account deficit.
Well, you could, although where the New Zealand dollar is at the minute, it looks like it's assisting reduction in the current account deficit. Were it to fall further, that we'd expect to see that speed up even more. We're not currently hearing concerns about it.
Governor, what signs are you seeing in the wholesale markets that things are thawing after the freeze of the last time?
We're seeing some initial signs of some markets opening up a little bit, but it's too early to draw any conclusions from that, and we haven't necessarily seen the bottom of these markets. We just have to wait and watch that.
Some people have said we've got until Christmas before the issue of rolling over that short-term foreign funding becomes an issue. What's your view on this?
That's my view. We don't believe we have a short-term problem around bank liquidity. That's not to say that bank liquidity doesn't get very expensive for the banks, but in terms of availability, we think we can make it available if necessary.
Mortgage-backed securities as collateral for
borrowing from the bank?
We'll leave it to banks to make their own announcements around that. The facility is in place and open for business. I just said we'll leave it to banks to make any announcements they wish to about that.
That's very difficult for us to do, with due respect, to ask all the banks whether or not, and they may just say that they don't want to answer that question.
We'll give you some phone numbers afterwards if you want to, if we can assist you on that.
Do you see any inflation risk in the broad commitment from both parties now to boost infrastructure spending?
Well, we have the position that fiscal policy and fiscal policy looseness has on these numbers is actually causing us less concern from a monetary policy point of view now. You would still need to ask Treasury about their broader views on impact on macro variables and impact on debt. That becomes more of an issue. But from a monetary policy point of view, because we are talking about systemic softness in this economy, that is less of an issue, and it hasn't been something that we've had to weigh up as tightly as we might have a year ago in reaching these sort of decisions.
Now, we're talking recession, not depression in New Zealand. I think that's the theme of what we're describing about in terms of our recovery expectations.
This is nothing like the 1930s depression, if that's what you're talking about.
People are talking about that in terms of a lot of our trading partner economies.
Well, not the people I'm talking to. They're actually saying a very nasty financial event, international financial event, a very nasty one. But so far, not a hugely nasty economic event. At the minute, what we're looking at internationally looks much more like things that we've had in the East Asia crisis, the tech wreck, and the 1990-91 recessions. It doesn't look like anything like the 1930s.
So globally, we're not expecting. I mean, as our growth rate expect to exceed that of our trading partners over the next?
Is our growth rate what? Sorry,
expected to exceed our trading partners over the next 2 years?
No, it's our luck that our trading partners will continue to pull up our growth rate by having higher growth rates. We're talking, of course, about Asia and countries that will continue to grow stronger than New Zealand.
What about the States and the UK?
Do you want to, Tim, tell us about that?
2009, we're looking at the US and UK having pretty weak growth rates, and at this stage they're looking weaker than what our forecasts are for New Zealand.
Does that fundamentally, and we're talking about the fundamentals driving exchange rate, does that mean that there's fundamentally strong drivers behind the New Zealand dollar?
No, I mean the New Zealand dollar fundamentally will depend on our terms of trade. And we've seen some reduction in our export prices, but still not bad by historical standards. We've, of course, seen a big reduction in our import prices, mainly oil and some other items. And it's pretty important that those feed through the economy in the way we would expect. We can only say the markets will consider the overall effect on the exchange rate.
What sort of actual evidence would you like to see in easing domestic inflation pressures? What sort of things are we going to should be looking for?
John, do you want to cover that?
I mean, the focus is on non-tradable inflation, and traditionally in a downturn, things like construction costs start to fall rapidly, and so those will be the very early signs, particularly in a housing market that is deteriorating.
What about local government rates and those sorts of things? How concerned are you about those?
Yeah, we think that we're encouraged to hear local authorities talk about the need for restraint. On the other hand, after what they've been through over the last 10 years, trying to get cost increases down to the rate of inflation doesn't necessarily strike us as the sort of restraint that most people in the private sector will have to do. So there could be some recalibrating and readjustment of views to be had there.
Dr. Bollard, Kiwi Bank has responded more aggressively in terms of lowering rates than the foreign-owned Australian banks. Is there a view on whether or not it would be useful if Kiwi Bank moved more aggressively into the business lending
No,
sector?
we wouldn't have a view on that. Are there any more questions? Well, thank you very much, everybody. Thanks for coming. This media conference is over.